Mara Holdings soars after beating earnings expectations. Bitcoin mining news. Mara Holdings, a prominent player in the Bitcoin mining sector and the second largest corporate holder of Bitcoin with a staggering 50,000 BTC, has recently made headlines by significantly surpassing earnings expectations. This impressive performance led to a 4% surge in its stock during after-hours trading, showcasing investor confidence. In its latest earnings report for the second quarter, Mara announced a revenue of $238.5 million, marking a remarkable 64% increase from the previous quarter and exceeding the consensus estimate of $227.9 million, as reported by FactSet. Even more surprising was the earnings per share (EPS) figure of $1.84, which defied analysts' predictions of a loss of 0.7 cents per share. In a strategic move to bolster its Bitcoin holdings, Mara disclosed that it successfully completed a $950 million offering of 0.00% convertible senior notes due in 2032. This funding will partly be utilized to acquire additional Bitcoin, further solidifying its position in the market. Analysts at J.P. Morgan have taken notice, upgrading Mara's stock rating from neutral to overweight. They highlighted that Mara boasts the most valuable mining operation, estimated at around $2.5 billion, largely due to its industry-leading scale, with a target of reaching 75 seconds by the end of 2025. CEO Fred Thiel emphasized in a letter to shareholders that Mara's value is multifaceted, extending beyond just Bitcoin mining. He pointed out that the company's vertically integrated operations, substantial Bitcoin treasury, emerging international energy partnerships, and early investments in AI infrastructure each contribute unique and measurable value. Thiel believes that when viewed collectively, the market has yet to fully appreciate the intrinsic value and long-term potential of Mara's business model. In a separate development, the White House has finally released its long-anticipated report on digital assets, 6 months after President Trump's executive order aimed at establishing a regulatory framework for cryptocurrencies. However, the 166-page document fell short of providing substantial details regarding the Bitcoin Strategic Reserve, a topic of significant interest among industry insiders. Following the report's release, Bitcoin's price remained stagnant, and the overall cryptocurrency market experienced a downturn. The report did clarify the existence of two distinct entities, a Bitcoin reserve and a digital assets stockpile. But it did not specify which assets would be included in the latter. According to Arkham Intel, the U.S. government currently holds 198,000 Bitcoin. It was also revealed that the Treasury will oversee both the reserve and the stockpile, establishing an office to manage and control the associated custodial accounts. Funding for these entities will come from forfeited digital assets, which must meet certain statutory objectives, including compensating identifiable victims of crimes and supporting law enforcement operations. Interestingly, the report stated that Bitcoin in the reserve will generally not be sold, and mentioned that the Treasury and Commerce would devise strategies to acquire additional Bitcoin, although the specifics of these budget-neutral tactics were not disclosed. Alexander Bloom, CEO of 2 Prime, commented on the report, suggesting that it largely reiterated existing initiatives and left some disappointed due to the lack of new information regarding the Bitcoin Strategic Reserve. He described the report as a standard policy document rather than a groundbreaking revelation, reflecting the slow pace of government bureaucracy rather than the rapid evolution of cryptocurrency technology. In another significant move, Strategy announced the acquisition of 21,021 Bitcoin for $2.46 billion, marking its largest purchase since March. This acquisition was funded through the proceeds of an upsized $2.5 billion preferred stock sale. Strategy, which is now the largest corporate holder of Bitcoin, has amassed a total of 628,791 Bitcoin, acquired at an average price of $73,227 per token, totaling $46.8 billion. The company also noted that the recent STRC transaction represents the largest U.S. IPO completed in 2025 to date, based on gross proceeds, and the largest U.S. exchange-listed perpetual preferred stock offering since 2009. On the other hand, Bakkt has faced a significant drop in its stock price following its announcement of a shift to becoming a pure-play crypto infrastructure company. After selling its legacy business for $11 million, Bakkt revealed plans to use the proceeds from a $75 million public offering to purchase Bitcoin and other digital assets. This news was met with a negative reaction from traders, resulting in a staggering 41% decline in shares. Co-CEO Akshay Naheta stated that this refined strategy aims to unlock new client opportunities and enhance their crypto and stablecoin offerings through advanced AI solutions and upgraded trading technology. In a noteworthy analysis, J.P. Morgan highlighted the potential benefits of Coinbase's ties to Circle, the stablecoin giant. They estimated that these connections could add a staggering $60 billion in value to Coinbase shareholders. The report emphasized the attractive economics of USDC for Coinbase, driven by high payouts and substantial margins from Circle's reserve fund. As Coinbase prepares to report its second quarter earnings on July 31st, the backdrop of the recently signed Genius Act, which establishes a regulatory framework for stablecoins, adds another layer of significance to the evolving landscape of cryptocurrency regulation in the U.S. Mara Holdings Q2 2025. Revenue surges 64% amid Bitcoin boom. Imagine a scenario where a crypto mining company not only meets but exceeds expectations, setting a new benchmark in its industry. That's exactly what happened with Mara Holdings in their second quarter earnings report, where they reported a stunning 64% year-over-year revenue increase to $238 million. But here's where it gets even more interesting. This surge wasn't just about mining more Bitcoin. It was also about the significant appreciation of the cryptocurrency itself. To put it into perspective, Mara Holdings' earnings beat analyst forecasts, with revenues climbing from $145 million in Q2 2024 to $238 million in Q2 2025. This performance was further bolstered by a substantial $1.2 billion unrealized gain from Bitcoin appreciation, which saw the asset grow by 31% over the 3-month period ending June 30th. The impact of these results was immediate and noticeable, as Mara's stock price saw a significant boost during after-hours trading, spiking to a high of 7.5% to $17.82 before settling at $17.22, while the stock closed down 3.2% the following day to $16.61. It's important to note that it had already gained 58% since the mid-April slump. One of the standout achievements highlighted in Mara's report was their growing Bitcoin treasury. Shortly after the end of Q2, their Bitcoin holdings surpassed 50,000 BTC, positioning them as the second largest corporate public holder of Bitcoin, trailing only MicroStrategy. During the second quarter alone, Mara mined 2,358 BTC, a modest 3% increase from the previous quarter. But their hash rate surged to 57.4 exahashes per second, second, up 6% from Q1. And this is the part most people miss. Mara's Bitcoin holdings aren't just sitting idle. As of June 30, their Bitcoin portfolio was valued at approximately $5.3 billion, rising to $5.87 billion currently. This makes them a formidable player in the Bitcoin landscape, second only to MicroStrategy, which boasts a staggering 670,770 BTC, worth over $71 billion. But Mara's ambitions extend beyond Bitcoin. They've recently forged strategic partnerships with Google-backed TAE Power Solutions and LG-backed Pado AI to develop innovative grid-responsive load-balancing platforms designed for next-generation AI infrastructure. With a target of reaching 75 EHS second by year-end, Mara is well-positioned to capitalize on the burgeoning AI and data center market. CEO Fred Thiel summed up the company's strategy succinctly: our vertically integrated mining operations, large BTC treasury, budding international energy partnerships, and early AI infrastructure investments each contribute distinct and measurable value. This impressive performance raises some intriguing questions. How sustainable is the current growth trajectory of Bitcoin mining companies like Mara Holdings? And how will the evolving landscape of AI and data centers shape their future success? These developments underscore the dynamic nature of the crypto and tech industries, where innovation and adaptability are key to staying ahead. What do you think about Mara's strategic moves and their potential impact on the market? Share your thoughts in the comments below.